Hey Bowtie Nation, Joseph Hogue with the Let's Talk Money channel. Really excited about today's video. Lately we've been talking a lot about investing in startups. So how angel investors, so investors in similar types of investments are making an average 27% annual return in what I used to look for as a venture capital analyst. But I know that just getting started in this kind of alternative investment and equity crowdfunding can be intimidating. So I wanted to do one last video on making your first investment. In this video, we'll go step by step to finding your way around an equity crowdfunding platform. I'll show you how to find startup investments, what to look for, and how it works. If you haven't seen those first two videos in the series, I'll leave a link in the video description below. We shared research showing historic early stage investments have returned an average 27% a year, along with the diversification from the ups and downs of the market. And while these are angel investors rather than crowdfunding, they're that similar early stage type of investment in startup companies. In the second video, I revealed the process I use to analyze startup investments to make sure that you only put your money in the very best. This series on how to invest in startups is in partnership with the Republic platform. Now, Republic is part of the crowdfunding revolution, enabling anyone to become an angel investor. What I like about Republic is their venture capital-like approach to researching companies. I spent a good part of my professional career as a venture capital analyst, and I love getting back into this idea of looking at those early stage companies, analyzing the business model, the financials, and the market to find those startup investments that are going to have that high return potential. Republic has one of the lowest acceptance rates for projects when compared to similar securities crowdfunding portals. Around 1% of the submitted deals are actually approved to be listed for the crowd to consider investing in. So I'll leave a link to the site in the video description below. Make sure you check that out. So first, I want to show you how to find your way around Republic, and then we'll look at two historical investment opportunities on the platform. Clicking through to Republic, you can click here on Invest to find how to invest, how it works, as well as links to different types of investments like startups and real estate. It's totally free to invest. The startups raising money pay a fee depending on how much they raise. In fact, along with your investment in the company, most are going to give out perks like product discounts and recognition. And again, why I like Republic is because it has that screening process in place to vet those companies listed on the site. Analysts are going to use a lot of the criteria that we talked about in our second video. They look at the founding team and the product. They then put the startup through a due diligence analysis, reviewing the business model, the market, and these other criteria. And most equity crowdfunding platforms are going to have some level of due diligence, reviewing those projects before they can get put in front of investors. But this is definitely a higher level of analysis on Republic's part. So we'll look at those two historical startup examples next. But when you're ready to invest, you just create an investor profile and answer a few questions about yourself as an investor. After you've found a startup, you make a commitment to how much you want to invest, usually anywhere from $100 and up for a lot of these projects. If the startup reaches its minimum funding goal, your investment is going to be made and the paperwork is going to be generated for you. Each deal comes with a refund policy as well, though. Cancel anytime before the last 48 hours of closing and you'll get a full refund. And what's really cool about Republic, and I haven't seen this on a lot of other platforms, is you can now invest in new video game companies as well. With the FIG acquisition, the platform connects game developers and companies with investors. Now I want to talk you through a couple of these historical startup investments on the site, show you how to read a campaign page and where to find some of the information that we talked about in that second video. And both of these startups raised money on Republic, but I had to wait until they closed their campaigns to do the video. Because of some rules for equity crowdfunding platforms by the SEC, since the video is sponsored by Republic, it can't appear to be promoting a project that's offering securities. That said, I'd love to do some deeper analysis on some of these startup investments in the future. So if you like this video or want to see some of that individual analysis on some of these projects, scroll down and let me know in the comments below the video. So you can check out the investments by scrolling down on the homepage, and you can change the sorting here to see them laid out differently. I was watching this Pure Green franchise while it was raising money, so we'll click through here. The first thing you'll see here is how much has been raised by how many investors and the time left in the campaign. These deal terms are very important here. The valuation cap is that maximum value that your investment is going to convert to in shares or cash. Now I know the lingo here can be confusing. Most companies will raise using an instrument called the crowd safe, which is an acronym for Simple Agreement on Future Equity. Now, this doesn't mean that it's a safe investment, though. Just like all early stage investments, you have a chance at making a return in some form of equity or cash payout if the company gets acquired, issues shares in an IPO, or sells all of its assets. So this valuation cap is the maximum value of the company at which your investment is going to convert into equity or shadow shares. When a trigger event occurs, for example, an acquisition or an IPO, investors receive equity shares at the valuation cap price. For example, if the company gets bought out for a value of $30 million, but the valuation cap on your investment is $12 million here, It means you bought into the company at that $12 million, and your return is going to be affected by that difference. Next here is the discount, and this is like a special kicker for investors. The discount is a special provision that can protect investors in the event that a future financing round is below the valuation cap. Otherwise, it's an incentive for future rounds or an exit if the safe is uncapped, meaning there's no valuation cap. You also see here the minimum investment, type of security, the campaign goals, maximum amount of funding they hope to raise, and the deadline to invest. Just as important, and we'll look at this more in a minute, is going to be these documents section. This is where you'll find that clickable links directly to the Form C, which contains all those disclosures required by the SEC, as well as links to a copy of the CrowdSafe or whatever security instrument is being used. While Republic does a lot of that due diligence on each startup, it is absolutely critical that you do your own analysis. Use that process that we talked about in the second video. Here on the Form C, you're going to find the company's business plan, management's analysis of the market and its competition, how they plan on using the crowdfunding proceeds to grow the company, and filed financial statements. I know this all seems confusing, but it's easier to understand with an example. So let's say XYZ Inc. is raising money on Republic at a $5 million valuation cap and a 20% discount, and you go ahead and invest $100 in the deal. Now imagine that XYZ has a future equity financing round at $10 million pre-money valuation at $1 per share. Based on the valuation cap, your $100 CrowdSafe would convert to approximately 200 shares. So essentially the price per share is going to be 50 cents compared to the $1 that new investors are paying. Now on the other hand, based on the discount, so that 20% discount rate, your $100 CrowdSafe would convert to 125 shares. Instead of paying $1 per share, the discount would enable you to receive shares at the rate of 80 cents per share because of that 20% discount. So if there's a valuation cap and a discount on the deal, your safe is going to convert to shares at whichever price is more favorable to safe holders. And in this case, that would mean the conversion price was determined by that value cap. Now that doesn't cover every possible situation, but this should give you an idea of how that value cap and the discount affect your value if the investment in your safe is converted to shares at the time of an equity financing. So we'll come back to that Form C, but I want to point out a few more things on this crowdfunding page. Next here on the right, you're going to see the perks the company is offering to investors. And these are in addition to your investment. So you'll see that each of these levels stipulates that you get that crowd-safe investment, but a lot of times the management is also going to want to give you that little bit more incentive. As an example, most campaigns are going to offer a personal thank you from the founders. You might get listed as an early stage investor. Higher investment amounts will usually get some kind of a discount on the product. Like here at the $1,000 level, you get a $100 gift card and an entry to have the company's next smoothie named after you. Now some of these perks can be really cool. I've seen private dinners with the founders and trips offered for big money investors. Understand though that these can be nice add-ons, but they shouldn't be something that's going to convince you to invest in a bad company. You do that analysis first to decide if this has the potential and you want to invest before you start looking at what these perks you're going to get. Now I'm going to be scrolling past some of the great information here on the left, and if we were going to analyze this investment, we would definitely want to read through this because it's going to include a lot of that market research and the analysis that we talked about in that second video. Here though, I want to point out some of the things that we haven't covered yet, what to look for in these equity crowdfunding campaign pages. Hugely important here, the section highlighting the company founders and the team. Like we talked about in that analysis video, this is probably the single most important key to a startup success. And like I pointed out in that, I'm looking for a few key things here. I want to see managers have some experience in the industry. I also want to see some experience in finance or accounting and just generally a deep bench of skills. Next is going to be some press highlights, an FAQ, and risks, but you definitely want to scroll down and read through this discussion section. This is where potential investors can ask a question and get an answer directly from management. I cannot stress how important this section is, especially if you don't have much experience analyzing these startup investments yourself. Even with my experience in venture capital, I always read through these, and most of the time I'll find something I missed or something I didn't even think about. Just as important though is you want to make sure that management is receptive to these questions and open about the investment. And read through management's responses. Make sure that they're actually answering those questions, not just giving people the runaround. And not on this platform, but more than once on others, I found equity crowdfunding campaigns where it was obvious that management was trying to hide information and just kind of talking around those questions instead of answering them directly. So we'll look at another campaign here, but I wanted to highlight something to show you how easy this is, how accessible to everyone this can be. I did the calculation on a few campaigns and it's pretty close to the same. Look at this $1,070,000 raised, and if you divide that by the 5,020 investors, you see an average investment of $213. Now, I'm not saying how much you should invest in these. We saw the minimum on this one was $100, but how cool is that? The average investor here is able to get in on an early stage startup company with just over $200 invested. Nation, that's a big difference from how this used to work in the past. When I was working in venture capital, before the Jobs Act, when only rich people with over $1 million net worth could invest, you were usually looking at a minimum of usually $10,000 or $50,000 to invest in these startups. So I want to walk you through one more campaign here, again, just to give you a feel for how these are laid out and where to find some of that information that you need. This one is Sparkle, a company making natural sanitary pads for women. And the company has raised over $150,000 from 628 investors, and at the time I'm recording this, they had 55 hours left in the campaign. This one has a valuation cap of $6 million. So again, if the company is acquired or issues shares or some other trigger event occurs for investors, you're going to get that company for the valuation cap or lower. It's also offering a discount of 15% if your investment is converted to shares. It's a $100 minimum investment for a crowd-safe campaign. Now, just like the first campaign, here you can download the documents filed on the platform or with the SEC. Perks include a thank you, t-shirts, and other merchandise, and a one-on-one call with the founders. And while you're reading through these crowd campaigns, you're not just looking for the information for your analysis. You're also going to make sure that management has a good grasp on the market themselves. For example, the campaign here includes a really well thought out description of the competition and what they believe are their competitive advantages. It's clear here that they know their industry, their market, and they're ready to compete. Again, we can scroll down to the team and seeing just 2 co-founders listed here, something I would definitely want to look for in the business plan provided in that downloadable Form C is their plans for adding management and a team to the company. So look for that link to Republic in the video description below to explore those startup investments available now, and let me know in the comments if you'd like to see more analysis on those equity crowdfunding deals. Click on the video to the right for a step-by-step on analyzing these types of startup investments, how to make sure you're investing in the very best companies. Don't forget to join the Let's Talk Money community by tapping that subscribe button and clicking the bell notification.